Good morning, traders. It's 8 a.m. Chicago time on Thursday, the 9th of March, 2023. This is episode number 2426. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Quick mic check, please, just to make sure that you're all hearing me, that I'm not talking to myself like I did on, when was it, Monday or Tuesday? Monday, maybe. Here's the Convergent Trading pre-market summary sheet prepared by the Convergent team. Not much. I'm going to not spend much time on this today. Really, the market, now that we have the testimony by Jerome Powell, Jeremy, to some of you who are close friends. Jerome Powell, we have the jobs report ahead of us tomorrow, and that's a key input. He did talk about, the jobs report, PPI, CPI, that sort of stuff, and this is the big one tomorrow. And so today, being as it is just the day before the jobs report, you need to take this into heavy account as far as the market committing to any certain direction. This morning, initial claims caused a response. Initial claims came in strong yet again, 211,000 versus 195. That is claims for unemployment, which is supportive of interest rates not going up. Yes, it is Groundhog's Day and opposite day. Jobless claims, 4-week average has been climbing. It's at 197,000, expected at 195,000 in the U.S. The prior is 193. This is one of the things that Jerome Powell talked about, that it's going to be pain. It's going to cause some people pain, and that the unemployment numbers would have to rise to relieve the pressure on pricing. Continuing claims also came in pretty hot, 1.78 million versus 1.659 million expected, 1.649 million prior. So that's where that stands. We have Fed's bar at 10. We have BOC's Governor Rogers speaking at 1:45. PPI out of Japan this evening, and the Bank of Japan rate decision. This is a big one, because it's the handing of the baton to the new Fed governor, or the bank governor over there. So the markets, the macro guys will be watching. The S&P, very balanced this morning. Really just pretty good volume so far. Quite balanced. The inventory 61% short. Again, for those of you who haven't heard of that, all this means is 61% of the volume traded below the close. So it gives us an idea of the market skew versus the last close or settlement. The point of control is hovering right on top of the MC point of control at 39.8875. And what we have in the overnight session is just another day that looked a lot like yesterday. If you recall, yesterday, this is yesterday's video. You could see it says right here, March 8th. In yesterday's video, because we were completely Gaussian, completely on top of the overnight point of control, completely on top of the prior day's point of control with the full session mid, full session VWAP, on top of the MC point of control, which is most accepted price in this area, on top of settlement. I told you that any pop higher would be sold, any push lower would be bought. The expectation is for no trend yesterday, and here's what we actually got. This was yesterday. So we open up. Here's the overnight session. When the trader bite was done, we open right on top and then push down, bought, push up, sold, push up, sold, push down, bought, push down, another attempt, bought, brought right back into this sandwich of levels. This morning, same kind of story. We have the point of control down here, which is in line with the prior session's overnight session. So, and in line with the MC point of control. We have been hovering around it until this morning at for the 7:30 Central, 8:30 Eastern numbers, and then we've been lifting since then. You can see some collisions. There's some absorption going on currently, and we're above the 4,000 level. So we're trying to break higher. We're above yesterday's high. Yesterday left a double TPO high. Very important. I just mentioned this in the convergent trading Maven's chat, and so did John in there, the Maven for the ES. And you could see that the market attempted twice to take out that high yesterday, and it could not. And that's at 4,003 1/4. And I wrote that this is going to be a key target, key early target for today, and the market's already taken it out. What am I expecting from here? Expecting a gap to settle trade, most likely. Consolidation, and then a return up towards the 40.15, 40.16 area. I'm going to tell you that overall my stance has not changed from yesterday. Same sort of stuff yesterday. Zero trades yesterday. Just I could not care less about what the action was. Very quiet type of session. Didn't do much with it. Anyway, I'm going to keep this short and sweet for today. We're opening up here. Hang on one second. I need to sneeze. For today, the expectation, response, drop, drop back into balance, consolidate in here, and then just hold steady in here. A drop through will likely consolidate in here and hold steady in here. Why are we committing ahead of that jobs report? So to me, I'm just not going to, there may be a breakout today given that we had balance yesterday, but I'm not going to commit. Sorry. Gotta love a sneezing fit that occurs right at in the middle of a live stream. That's just awesome. So what we have is a bit of a kind of a megaphone here, really a diamond. And we're breaking to the upside. Again, I'm going to wait to see if the market is responsive early or not. The delta, sorry, about to sneeze again. The delta is really breaking higher. The delta is breaking higher, but I expect, and it's all moving directionally, right? We have the three components of the delta above the zero line, but again, I'm expecting a drift down early on. So all I can see from here is that we are very, very likely to find ourselves back in prior settlement. So the key trade this morning will be the gap to settle. Now, very important, if I'm wrong in that my expectation, I'm still going to have to trade the setups, right? So I'm not like, that's it. All I'm going to do is short it this morning. I still have to wait for the market to tell me what it actually wants. And we don't have to catch the top. And that's where traders get really hurt and really obsessed, is they think that if they expect that the S&P is going to go back to settlement, that they really need to time that high. You do not. This is a hoax. This is the stuff of FinTwit gurus to post a chart with the level right there and look, I called the high and all that. What you have to do is wait for whatever your setup is, an order flow failure, a failed auction, a lower high, a reversal in delta, something, whatever it is you're going to use, a crossover, whatever, and then there's plenty of room to get back in there. You know, there's 10 points now. As long as you keep your risk tight relative to your target, it's still a valid trade. So don't try to anticipate it. My goal is not to anticipate it. My goal is not to catch the trade at the open. The trades at the open, really, the outcome's pretty random for those. I don't have good setups for that. I know others do. But overall, expecting it to come back. Now, if it does not, if it consolidates here a little bit and then shoots up, like let's say it stays above the range, pulls back to that 3.25 high from yesterday, the double TPO high, and it just shoots up. This is really important information. This is, again, most of you have heard me say this, this is the Monty Hall problem. The Monty Hall problem. That one thing was taken off the table, the probability of the other two is higher, right? To change our selection has a higher payout, and so then it becomes a really important push higher. And if it does push higher, then we're looking at the higher time frame chart, and we do have certain areas that we're looking for: the 40-20, 40-29, and then we have a lot going on here at the 43-45, and of course the 40-50 if it decides to take back what Fed's Chair Powell said the other day, which I just don't see that has changed. Yes, he was a little bit dovish yesterday, but overall, I'm not expecting this thing to rip up. So I'm going to be very much in the mood of balance because the market is telling me so. Again, we're looking at the point of control being down here, yesterday's point of control being up here, the day before the overnight point of control is down here, the prior session's point of control being right there, the MC point of control being right there, settle being there, full session VWAP being there, full session mid being there. I mean, come on. So there's just a lot of magnets to the short side, and that's what I'm expecting. But if we're wrong, everybody's looking at the same thing. If we're wrong, the squeeze could be pretty strong. It might generate some pretty good opportunities. So if we get an impulse up on the open with a weak pullback, then I'm off the idea that we're in a gap to settle environment. I'm not going to look for a gap to settle setup. Okay, I'm going to leave you with that. As far, the NASDAQ's about the same. The NASDAQ is a little bit stronger on a relative basis, but crude had an interesting day yesterday. Crude, after gapping down, had a completely Gaussian, very balanced, it's basically symmetrical neutral on top of this big MC point of control, which is also the magnet in the area right here at 76.60. It came back to 76.60, rested and closed, settled right on top of it. This morning it is just popping higher, and it was in range, in balance just a moment ago, and it broke to the upside. Crude, I'm going to be looking to buy the first test of value area high. Otherwise, if it does push higher and starts to fail and puts in a weaker high or weak pullback, then I'm looking for a gap to settle back to value high for scale and the settlement price for a target for crude. Crude has a pretty nice setup this morning. It's out of balance. It's pushing against the big selling day. So there's a fair amount of resistance in this gap here. It's pushing towards the settlement of that big selling day. So I'm looking for crude to just squeeze and then fall over as well. We'll see what it does. Good luck today. Don't forget, by the way, I'm hosting Jared Tendler today to talk about unleashing your confidence. discussing trader confidence. How do you keep a high confidence? How do you recover from a drawdown? How do you recover from not making progress or from a frustrating market like we're seeing currently, where the macro environment is not allowing the market to reprice? This is what we'll discuss today. We'll discuss various scenarios and how Jared recommends dealing with them. You can point your browser to go to ct.pro/unleash-confidence to join. You can set a reminder to send you right to the YouTube event, which starts at 1 p.m. today. 1 p.m. today. It should say today, not tomorrow. Sorry about that. It's a good one to attend. Jared has a lot of great ideas on how to just squeeze out performance, and I'd suggest you attend this. Again, 1 p.m. today. You have the link in your live chat. You have the link in my feed. You have the link on Convergent Trading's feed. Join us and be sure to be ready to ask questions. Good luck.